Hey guys, welcome back to Retire by 40. This is another portfolio update. As always, you can use this video to help you out and invest like I invest, or if you have any criticism, of course, you can always leave it in the comments. I'm always happy to see other people's perspective and thoughts on investing. So without further ado, let's go ahead and jump into this week. As you guys can see here, this week was pretty good for me. I made about $1,500 of profits in some of all of my accounts. So each column here represents one of my accounts: Robinhood, Vanguard, 401k, and ESPP, which is an E-Trade account that has shares of a company that I work for. Anyway, so looking at Robinhood, Vanguard, and my 401k, you guys can see here that those are primarily where I made most of my gains this week. For the most part, in each account was about $400 profit, and in my E-Trade account here was about like $300, and in total is what you see here, which is $1,500. Also, as you can see here in this column, I contributed $329 into my 401k. So I'm actually going to walk a little bit back. I don't think I made $400 in my 401k account. It's closer to $200 if you reduce the $329 with the about $500 difference between this week and last week. Anyways, so as you can see here, the total of all my accounts is now 54,795, which is really close to 55,000. And I'm very happy about that. Of course, more money is a positive thing when you're investing, of course, of course. So now if we go over here to the running stats of what I've been recording in the past, I want to say 6 months. And as you can see here, I have made about $8,400 in profits just in 6 months. And I have contributed close to $10,000. And again, the same amount of time. And I have accumulated $17,000 or almost $18,000 in 6 months. If you haven't been following any of my portfolio updates, welcome, hi. Make sure that if you like this and you want to keep seeing them, to subscribe and hit the like button. You can see here that I have, my target was $134.62 per week this year. And that was about $7,000, a little bit less than $7,000 a year that I was expected to make in the market, which was a 25% return. And right now I am sitting at 8,333, which is higher than 7,000, which means I am doing more than 25% return currently right now, year over year, which I'm really happy about. Originally, I did set the 25% goal as kind of like, if I hit it, I hit it. If I don't, at least I'm working towards something that's not the average, right? It's like, I think the average is somewhere between 8 and 12% maybe, or 8 to 14%. I'm not really sure in the market. And I just wanted to set a goal that was higher than the average, just so I can kind of work towards something that isn't average, right? Because if you go for the average, it's just kind of like, okay, you hit the average, so what, right? But I'm really happy that I am over 25% return. At the end of the year, I will be totaling everything that I made, because like I said, I didn't start this in the beginning of the year. I started it in June. I started recording everything in June. And of course, during March, I think, when the pandemic started, everything went down, so I lost money. But then I recouped everything really fast, especially in my Vanguard account. I think that's the first one that went positive, and then I profited like $3,000, I think. It was something crazy. And that's the account that I usually just buy and hold, which was kind of funny to me because I like investing and buying things, and then when I make profit, just selling it. But that old adage of just buying and holding really does make sense, and I did see it firsthand with my Vanguard account, because I had nothing. I think I had Apple and Microsoft, some form of tech combination, but I know for sure Apple was in there, and I was down quite a bit. I think I was down about $1,000, and then I broke even, and I just kept going, held, and then I made the $3,000 plus now profit, which is pretty cool to see that. I did since then sell some, and actually now I do remember what it was: Apple and C Limited. And it was C Limited actually the one that really got me to break even and then make a lot of profit afterwards. So if you do find anything useful here, it is that I am not just doing day trading in all my accounts. I am kind of doing different things in different accounts. A quick summary would be that in Robinhood, I do mostly day trading, although I did get restricted for day trading. So actually, now I'm not restricted. The restriction stopped December the 3rd. Before September, that's what I was doing in Robinhood, buying stuff in the day and usually selling stuff by the end of the day or maybe the day after that. And Vanguard, it's the completely opposite. I buy something that I see that I really like Apple and C Limited, and then just buy and hold, and then sell 3 to 7 months down the line. I don't think I've actually sold any Apple shares. I've only sold C Limited shares. And then the 401k, I have no control over. It's just a third party that is employed by my company, and they just do their thing. I have no input really, except I tell them that I want an aggressive portfolio, and then they just do crunch the numbers. I really don't know what they do, and really it's not one that has made a lot of profit. I don't think. It started at 15,000 and now it's at 22,000, and for the most part that's the one I contribute most to. So it's the one that it's kind of like it's consistent, but I don't see a lot of profit, which really it doesn't really matter to me really, because the other accounts are making profits, and it's okay to have a little bit of consistency for me personally. So in case I make some really bad decisions, that at least my Vanguard or my 401k is somewhat safe. Then my ESPP or E-Trade account, that is all shares for my work, and I get 5% off of the stock for my company, and then I just hold, get dividends from the company, and then reinvest those dividends. I don't plan on touching or selling anything in there. It's been pretty decent for me. I think I've had about $1,500 growth or so. I have to do the math on that, but it's been pretty decent for how small the account is relative to all the other ones. Like starting in August, right? You can see it was 1,800, and compared to 17,000 for my 401k and 10,000 for my Vanguard and Robinhood, almost. It's a pretty tiny account, and it got some pretty decent profits. And I really do like the dividend payout, especially reinvesting them, because you're just buying into the company again, right? And it's just compound interest. You're not necessarily accumulating a lot, or at least I'm not now, but you can definitely see in the future that you're going to be gaining so much money if you just hold. And as long as the company doesn't go under, of course, then you're going to be making a lot of money in the long run. Enough about this. Let's go into Robinhood and check out some action this week. So Apple actually did go up significantly this week. Apple and C Limited. So if I want to pick one that was the winner, it's obviously C Limited. As we can see here, in 1 week, it did about 10% return, or $18-ish. And that's a really good return in 1 week. And compared to all the other tech companies that I like, which are, of course, Apple, Amazon, Microsoft, and C Limited, C Limited is definitely the one that's been performing the best. Even if you take a look at the 1 month, so not the 1 month actually, we'll save the 3 month, but the 1 month is still pretty flat for the most part, right? If you draw a line here, it's relatively flat. Now the 3 month though, it's not as flat as all the other tech companies, because you can kind of see a pattern here where it's trending upwards. And I know I dig on people that do tech analysis. I'm not really doing tech analysis. I'm not drawing triangles and all that stuff, but you can definitely see trends, right? Like you can see that, hey, people seem to be seeing some value in C Limited, but if we go to Apple, for example, in the 3 month, it's pretty flat. Like there's definitely a better trend for C Limited versus Apple, and now we're going into Amazon and later Microsoft. You can also see here flat. Microsoft flat. But C Limited does definitely have a little bit more of a trend upwards, which is good, definitely. And it's definitely the better performing of the four tech companies that I really love. Besides tech, though, I have been buying into Fozzy, and it's been doing pretty good. Although this week was pretty, it was only all right, I would say, because if you compare this week with the 1 month, like the 1 month is phenomenal. It's a 50% growth. Here it is about 7%, but it was also kind of flat intra-week, as you can see here. The biggest gains were probably Monday and then Friday. So I am, of course, switching from a more tech heavy portfolio with Apple, Amazon, Microsoft, and C Limited, and doing more of a financial move like with this ETF and some other companies or categories that I have talked about in previous videos. And for that, I have actually stopped investing in Amazon. I do still have some shares that I plan to keep. However, I'm not actually going to be buying any more Amazon for right now. I'm also slowing down the buying of Microsoft, and I'm keeping Apple and C Limited because those are kind of trending a little bit more upwards. But other than that, I'm shifting a little bit more towards this particular ETF, a couple maybe other ETFs that pay high dividends as well, so I can get some more dividend yields that way. I haven't done too much research, but I do plan on shifting a little bit further than I am now from tech. It's just a little bit slower process because I don't want to jump in too fast and then get burned, of course. In summary, you can see here with Fozzy that I have about $1,200 invested so far, and I have made almost $100 off just that investment. I also have one put that I don't plan the stock to go down, but I like insuring my positions because I've done so many trades where I go in soon too fast and then it tanks, and I'm trying to make sure I don't lose money. And it's twofold, right? Like I said before, that I want to buy slowly into these companies. And of course, I'm also going to sell when I see some decent profits here and there. But I'm also buying options, puts in this case. So I can, if it goes down and I'm still buying, right? I'm cost averaging down just in a faster interval. I'm doing it every day. And if it goes down, hey, my average goes down as well, and my put is also securing some money, so I don't lose a lot of money with the allocations that I have currently. So for example, right now I have 23 shares, right? So like let's say on Monday this stock goes down to like $50, right? So that would mean my option will cover at least some of my losses. And then that Monday, I will also be buying into the company. So my average will inevitably go down and my option will secure the losses, the difference, I guess. It won't be exact, right? I'll still lose some money, I'm sure. But at least there's a little bit of insurance. If it tanks, then I'm happy because I'm making a little bit of money, even though I'm losing a little bit of money with the allocations that I have. But that's it. This is going on for a long time. I usually like to keep these short, but it's kind of getting long, so I'll leave it here. I will be on vacation next week, so I don't think there's going to be a portfolio update video. I might post something on Twitter. I made a Twitter for this account for this YouTube. I don't really like social media at all. I don't use social media at all. So it's been a little bit weird using that. And yeah, if you want to hear stuff from me, I'll post random stuff, I guess. I don't know. If you want to follow me, go ahead. I'll leave a link down below. All right, guys. See ya.